Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started.
Welcome to another episode of Kaizen Time. I'm joined by Pierre, a manager here at the firm. Pierre, it's been a while. How are you doing?
I'm doing well, Mark. How are you doing?
I'm doing pretty well, too. I haven't seen you in a long time, which is very sad. And going along the lines of things you haven't seen in a while, people who miss their taxes or companies that miss their taxes, therefore they've missed the IRS for a while. Therefore, the IRS probably misses them. What's it like? What happens when these things happen?
So it's funny you put it that way because everybody talks about getting a love letter from the IRS, and that's the first thing that happens. But sometimes it takes a while.
Does that come in a pink envelope with like a heart sticker on the back?
It does not smell good. It does not look good. It doesn't make you feel good. But it is an important part of what happens because mistakes happen all the time.
I'm sure they do.
And so when you're talking about a business that misses an estimated tax payment, generally we're talking about S corporations for their state tax or federal C corporations with their federal tax, because a C corporation would owe tax at its own level. It pays its own tax. And the point is every year you have an opportunity to prepare to pay next year's tax. And as long as you pay 100% of current year's tax or 110% of next year's tax, you could owe $1 billion in next year and not have to pay until the due date and incur no penalties. But so oftentimes we put together the estimates so that people can pay them. And sometimes something happens. They either forget, they don't have the cash, they've changed bank accounts. That happens a lot when people think just moving their bank accounts isn't such a big deal, but it is, especially if you have these set up to go automatically. So really what you want to do is try to catch up as soon as you can is the best thing. Now that will prevent penalties from growing, but it generally doesn't make the penalty go away.
So I want to pause you right there. What does that mean? Does that mean like reach out to the IRS right away? Let them know that you're working on it, or just get the money to them?
Just get the money to them. And some people, they will wait until the next payment and double up that payment. Generally, we take last year's tax bill, divide it by 4, and it can be adjusted during the year. So to get into that limitation where you don't get the penalty, you want to make sure you have that paid in before the 4 quarters of the year. And in corporations, it's going to be March, June, September, and December 15th.
Okay. So what happens if you don't make the cut? What does this ultimately look like?
So generally, when you go to file your tax return, you're probably going to have a larger tax bill. And with that, they're going to give you penalties and interest for underpayment of tax that they wanted you to pay during the year. And they just base it, it's the form 2210. They do a calculation. They said, you should have had this much tax paid in by this date, this much tax by this, and it's just a math calculation. But it can add up if you owe a lot of tax. Now, if you have a slow year and you owe less tax, then you may be okay. But if you have a better year than you had last year, you're probably going to be in a little bit more trouble.
And how do they don't know that right away?
No,
do
they don't know it till you file your tax return.
Okay.
So when you miss an estimate, they're not going to, if you miss the September estimate, you don't get a letter until you file the tax return, and they're mad at you for not making that estimate.
Here's another question for you. Something like an LLC, which is probably significantly smaller. Let's say they don't make much money in the first half of the year, and then the second half of the year, they make bank. And then all of a sudden there's a question of like, where was your half year tax payment?
That's a great question because the IRS does allow you to apportion your revenue during the year.
Okay.
You can say, hey, think of a landscaper that does snow plowing and it doesn't snow. I mean, it's freezing cold out right now, but it's not snowing at all.
Yep.
They don't have any revenue until it starts up in the spring. So they could get away with not making their first estimate tax payment because there's no revenue at that time. All they have are expenses. They're trying to keep their employees busy. They're doing a little bit, or all they have are expenses. They don't have income in that time of year.
So realistically, the IRS gets that, right?
Yes. And there's a form you fill out. You say, through the first quarter of the year, we had a loss. Second quarter, we had a loss. We didn't start making money till the third quarter. Okay. That's when we made our estimate. So if you had made an estimate in the first quarter, didn't make one in the second quarter, but you had no income in the first 2 quarters or very little, you're probably okay to miss the third quarter estimate. Remember, it's just a math calculation.
Okay. Well, very good. What else can we talk about with these? Basically, what are we doing with these penalties? How can we really deal with them? How can we make it go away?
So make it go away. There are a lot of different ways to abate penalties. And a lot of times you can ask for forgiveness from the IRS if you don't do it all the time.
Okay.
They call an abatement a first-time abatement for almost any penalty. And if you haven't had a penalty or something in the last 3 years, they say first time, but really if it's in the last 3 years and you've been clean, you can usually go to the IRS on, a 15-minute phone call and make that penalty go away.
So basically what you're saying is it's kind of like insurance, like your first auto accident, right?
Correct, yes.
I'm going to let this slide, but that's it.
Yep.
Okay.
Very similar to the first time home buyer sales. Mm-hmm. That used to be you could only do it once, and then they changed the rule, and you can be a first-time home sale every 5 years. So,
wow. I should write that down. That's pretty good. What else can we do? Obviously, so paying it is the only way out, right?
Correct. Unless you don't have as much tax, but your best bet is to get a payment in soon. It's better if you miss that September payment, it's better to make an October payment than to wait till the December, because they're going to do the math and they're going to say, you should have had 3/4 of your tax bill in by September. You didn't, but 2 more weeks, 4 more weeks is not as bad as 6 more weeks or 8 more weeks.
Okay. So they're looking at it basically as it comes in. They probably have like a hard line that's in December, January, where like you hit this, now you're in the real trouble.
Yes.
Right?
So other than estimates, other things that corporations have problems with is if you don't file timely. And that can be on your 941s, your payroll taxes, any of those payments, or filing your corporate tax return. So there are penalties they're like $210 per shareholder per month late for filing your tax return. And that one can add up. You have 10 shareholders and you're a couple months late. That's some big dollars.
Those multiply quickly.
Yes. So there is an exemption for partnerships. Partnerships, generally, you can go in and as long as all the partners have paid their tax on time, you can generally apply to the IRS and say, hey, all 10 partners paid their tax on their tax returns timely. We just didn't make the estimate and just a piece of paperwork is missing. And they will generally waive that just for partnerships, not for S Corps. And C Corps do not have that same penalty.
Okay. Pierre, as we kind of just wrap this up, what's one thing you can tell me? Choose one thing where you say, what is the best piece of advice that you can give to companies as far as dealing with their taxes and more or less avoiding any type of penalty?
So generally pay what you have prepared to pay, plan on paying that amount. If you can't, we need to come up with another plan. And that means you have to stay in contact with the IRS. If they send you a letter, don't sit on it. If you miss that payment, like we talked about for the estimates, the IRS isn't going to send you a letter, hey, you missed your September payment. They're not going to be mad at you until you file your tax return. So employers oftentimes or business owners think, hey, I got away with it. Nobody's calling me. Nobody's asking me for it.
I only got one letter a couple months ago.
Yeah. And you get that letter and it's not related to this. It's for something else. But they think, nobody's bugging me for this. I should be okay.
It's not like the repo guy where they're like, hey, your payment on your car is da-da-da-da-da. Yep.
And it makes me think like the IRS agents are like, these guys didn't make an answer. We're definitely putting in that. They don't do that either. They just don't have the capacity. Yep. But it's in your best interest to stay on top of those estimates and let's make them on time. And that's the best advice I can give.
Perfect. Thank you, Pierre.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.